Hello, what up my people, welcome back to my channel once again. So today I'm going to be sharing my trade recap again. As usual, I'm going to be sharing 5 trading days. So this particular day we're going to be starting from 20th of October 2025 to 24th of October 2025. Yeah, 24th of October 2025. So that's 5 trading days. So starting from 20th of October, I think this is where we started from. Okay, so before the market actually opened, I started from the 1 hour time frame. I did my higher time frame analysis before before the market actually opened. I think the market opened at this particular point here. The market opened at this particular point here, and I saw a 1 hour order block. So let's go to the 1 hour time frame so that we confirm this 1 hour order block that I saw that made me had some nice confidence towards that particular trade. Okay, so that very day, this was the order block that I saw. And you see I draw the body candle only the body candle I drew. So what I was waiting for was a nice candle confirmation, because this was Asian session. After I draw this, I went back to my 5 minutes time. No, I first went to my 15 minutes time frame. Let's see how the 15 minutes time frame looks like. After that, I went to my 15 minutes time frame to look at better confluence to take that particular trade. Where is it? Where are you? Okay, this is it here. So looking at all of that on the 15 minutes time frame, after I saw this, I didn't trade that Asian session. I just marked my 1 hour order block, and I was waiting for probably the London session before I take any trade. So on the 15 minutes time frame, we had a clear support here and a clear liquidity. Now when I saw this, I still went to my 5 minutes time frame, because I like making sure that all the time frames actually tallies with what I am trying to trade. So on the 15 minutes time frame, I saw a nice pattern for my support, double engulfing candle, first pullback, that's an inducement, did not tap into this particular support, so I call it my liquidity and this is my support. So I was waiting for a nice session to take that particular trade. So that very day, London session happened. So now the manipulation happened before the London session starts. Now see the time that the market tapped into the support. You notice it's around 7:30 a.m. and because I had a good pattern recognition around this, because all my rules were all present here. I saw a nice support, a nice inducement. Now the third rule is consolidation before my point of interest. So I had a lot of consolidation here before that candle actually came to the point of interest. So immediately I was ready to strike him. I didn't use buy limit, I used market execution, and the moment the market came to this particular point, I was ready to buy and I bought immediately. So after I started seeing this particular move and I saw the nice break of this particular level, because the level was broken with a nice impulsive movement. Sorry, if you notice, if I see any nice displacement around my psychological level, I take it as a confluence that the market is coming back for a retest. So after I saw this, what I did next was that I used my fib level from the swing high to the swing low. Now this is where I will use for my swing high and swing low. The first pullback, this is the first pullback, and the highest and the highs. So what I did is I marked from this particular high here. I marked from this high here to this particular swing first pullback here. So what I was waiting for was a tap of this 0.5 level here. If you can see, this was the 0.5 level tap, and on the level of this 0.5 level, I had a nice OCL also, and the market came, tapped into the OCL. That was how I caught the second trade. So on this particular day, I caught these two trades on London session. I was supposed to catch this particular trade after it broke this level, but I didn't see a nice displacement, so I didn't take the trade from this particular psychological level. So the first trade was an 11:1 RR, and the second trade was a 3:1 RR. So after a nice TP here, I was waiting for another nice pullback. So what I did was that I marked from the first pullback, the first high. This is the high here, and I marked to this particular first pullback here. Can you see the first pullback? This is the first pullback here. I didn't mark from this swing low, I marked from this first pullback. Now at some point, a lot of people have their own kind of trading rules based on drawing their fib level, but based on all my back testing and forward testing, I've actually seen that most of the time when you draw your swing high and swing low, sometimes the fib level don't give you the actual place you would actually enter from. But when you look at the first pullback as your swing low and your swing high is the most highest, you're going to get probably nice precise entry. If you don't get precise entry, it's going to give you a range where you can look to buy from. So at this point, I saw this particular order block and is within the 0.618 level and the 0.5 level. So this particular order block, because it's a support, it gave me a nice confidence that this is also going to buy. So that was what I did. Immediately the market came and tapped into this particular support. I was on the market execution and I bought that particular trade straight to TP, and I took profit at this point because of my reaction level. Anybody that watched my recap would know that I normally take profit from my reaction level. I didn't mean I held on to that trade, I would have banked another 8:1 RR, but I've already catch some trade on London session already. So that very day on Monday, I caught some nice 3 trades and it went all straight to TP. So going to Tuesday. Okay, so that same Monday, as you can see here from this particular fib level, the first pullback. After this particular run, the first pullback, I marked from this particular high here and to this particular swing, first pullback here. And what I was looking at is a nice OCL again, and it's in between the 0.618 level to the 0.5 level. I didn't take this trade, but the moment the market tapped into that OCL, it went straight to TP. So that was what happened on Monday. We got 3 nice trades. So for Tuesday Asian session, we had some nice displacement for Asian session. So at around 6:30 a.m. I saw some nice patterns. That very day I was looking for sales, because why I was looking for sales is that this particular trade closed with the body candle here on the 5 minutes time frame. I take this as my market structure shift. So what I was expecting probably was a pullback, tapped into this place, and I start selling. That was what was supposed to happen that very day. But irrespective, I didn't take the sales because sometimes gold can be very manipulative and I don't want to be around that manipulation. But that very day it happened. So what I did was that I saw this nice support, double engulfing support. Can you see lying on my psychological level? So I quickly took that reaction to trade that particular level. Now I didn't enter the trade immediately because I was waiting for a nice confirmation, and my confirmation was this particular hammer candle here. If you notice with this hammer candle, so what I was waiting for is a pullback to tap into this hammer candle, and I entered the trade, and that was what happened. The market came back, tapped into this particular hammer candle, and I took a nice 2:1 RR. Now, why did I enter this second trade? Fib level, and I saw some nice internal support because I was expecting it to be bullish. So I marked from the high of this particular candle to the low of this particular candle, and it gave me that this particular support, internal support, would actually hold on to the trade to give us some nice 3:1 RR, but it didn't happen that way. It took us out within 10 minutes. So that very Tuesday, after I encountered that loss, I didn't trade again. But look at what happened, bro. Look at nice displacement. I am not regretting that because I've caught what I'm supposed to catch. And that very Tuesday, that was what happened. Took just 2 trades, won 1 and lost 1. So for Wednesday, Asian session, nice displacements, nice trades, and boom, I didn't even trade all of this because I wasn't so convinced to trade that very day, and I waited for Thursday. Immediately I got into the market, London session, straight SL. Now, why did I take this trade on Thursday? I have my trading rules about double engulfing. I was expecting that this market was going to respect this particular double engulfing candle, but did not happen, and the market took me out. Now, that very day I used fixed range volume. Yes, this is it, fixed range volume profile. That very day, around 6:30 a.m., I drew this particular fixed range volume profile from this high to this particular low, and it showed me that this is the point of control. This thing happened in my eyes, and luckily enough, I didn't take this trade because I didn't take this fixed range profile very serious, because along the weekend I actually watched some kind of video about fixed range profile, and I did my settings, trying it out. I said, let me even see how this particular thing works very well, because yes, I've had experience about it. I've used it on forex pair, but I stopped trading forex pair for a long time, almost a year now. Only Euro USD, that's the only forex pair I was trading, and this particular fixed range showed me that this is the point of control, and this market started moving in my 2 eyes, and it happened that I wasn't able to catch this trade, and trying to catch this double engulfing, the market took me out for that same Wednesday in London session. So that was how I lost that particular trade. So for this particular trade, this fixed range, I also used it again at this point, but this particular trade was based on my psychological level, because I was waiting for a pullback, and this is a loan order block. I was waiting for a pullback, had a lot of consolidation, had inducement, first pullback, second pullback, and the market consolidated so much, so I was expecting probably a 2:1 RR, because this is an obstruction for me. So I took profit at this OCL here, and it gave me a 2:1 RR, and I was out of the market. And immediately the market got to this particular support, this particular resistance, it started coming down back again. So after all of that, I drew my fixed range from this particular zone here to this zone, and this fixed range showed me that this is a point of control to sell, and immediately it started selling. So already fixed range was giving me some kind of good confluence that it actually works on gold also, but irrespective, I wasn't so convinced to start using it on my live account. So that was what happened for Thursday. We had 2 trades, lost 1 and won 1 on Thursday. So on Friday I decided to use this fixed range. And this was what happened. After creation of this particular long buys, I was waiting for a retest of this particular level. So I drew my fixed range from this particular zone here to this zone, to this particular zone here, and it gave me a point of control at this point. At this particular point, if you notice, I didn't enter the market on this my psychological level. I waited for a nice confirmation. So when I saw this particular candle coming to retest this particular psychological level, I entered the market immediately, and it also gave me a nice 2:1 RR. This is my resistance here, and the market came. The moment it caught into the resistance, it started falling, and that was how I caught this particular trade on Friday Asian session trade. So after that London session, I was expecting a buys from this particular trade, because I was looking at this particular support here together with this OCL, but the market did not respect that and it took me out straight. So after that, I didn't take any other trade, and that was how we finished this particular trade and this particular trading week with some nice trades. And let's count our trades and see how many trades we took for this week. Now, this trend line was a 4-hour trend line. 4-hour trend line. That was how I was supposed to expect a lot of sells here, but ended up buying from reaction zones. That was why I was just only catching 2:1 RRs. 2:1 RRs. So that very day I didn't follow my buyers because of probably a lot of things happening, and I ended up catching small trades. So that is it for this week. So let's count our trades that we took for this week and see how this week went. So let's say I'll call this one trade because it's a continuation trade. 1 TP, 2 TP, 3 TP, 1 SL, 3-1, 3-1. We had 1 SL here, 3-2, 4-2, 5-2, 5-3. So we had 5 TPs and 3 SL for this particular week. So that is that for this week, and I have a big announcement for this week. From next week that we'll be entering, I would reduce my volume of trading on gold, and I will be switching to putting on more of my trade recap on Nasdaq. That's NAS 100. Because gold at the end of the year most of the time has a lot of manipulations. Yes, I'll be watching on gold, but I would actually reduce my trade recap on gold on this particular channel. Now I will be transitioning into futures. By the end of this year, I will be transitioning into futures completely. I'll be trading ES and NAS 100. That's Nasdaq and ES. So why I will be doing that is that Nasdaq has been very consistent due to my watch out on it for testing, because I really don't fancy back testing. I've been for testing Nasdaq and it has been very, very consistent. Not that I'm giving up on gold, but I will be trading gold with low volume and focus on futures fully. But the beginning of 2026, I will be moving into futures completely. So that is that for this particular weeks, and thanks for watching my trade recap, guys. I'm gonna catch you guys on the next one. Ciao.